Okay, we are good to go. Here we are. We're sitting here at the end of 2022. And long story short, I'm going to move pretty quick, but we all sat down and kind of put our heads together and said, okay, we want to have a final training webinar of the year. We want to make sure all of our agents, which we now have over 22,000 from all different parts of the country and just about every city of the U.S., and some are more focused on the term side, some are more focused on the large ticket cases with estate planning, some are focused on health, P&C, supplemental products. And what is the one product, right? Or what is the one part of our industry that everybody can brush up on or bring top of mind, right, when moving into the new year? And how can we supplement our income, right? And help our clients, most important. So we thought about disability coverage, right? And over the years, we do about 5 to 10% of our total premium is based on DI coverage. So we wanted to make sure that our agents were aware, number one, and then we have a lot of veteran agents in the DI space, and we wanted to make sure that even the veteran agents knew about the latest and greatest statistics, product development, technology updates, all related to DI. So that was the point. We all agreed. Let's say Andrew, Carrie, Annalise, our entire marketing team, which is made up of 10 of us now, all came to the conclusion that we need to bring DI back to the surface, and we want to handpick our two top carriers to invite them to present. Okay, and when you say, all right, your two top DI carriers, right, which is number one, Principal, and you say, okay, well, they're focused more on, white collar or physicians. Yes, they are definitely geared towards that part of the population, let's say, that are open to DI coverage. And then we wanted to say, okay, well, what about blue collar? And what about middle America? So that's where Illinois Mutual came into the picture. So we now have literally the two top disability carriers when it comes to white collar and blue collar. When it comes to technology, when it comes to EAPS, non-med underwriting, okay, simplified issue. And we all agreed once again, Illinois Mutual and Principal were the two top go-tos. So that's how we came up with the webinar today. We're very excited about the training, and it's going to be, yes, a little bit of a 101 for the newbies, and then we're going to dive a little deeper for the veteran DI agents. When you are an agent, right, when I put my hat on and say, okay, Bill, I'm an agent out there, right, middle of America, and I'm trying to gear up for the new year, I need to say to myself, I'm calling on, right? I'm visiting all of these prospects, right? Especially in early January of 23. I need to be aware. I need to have my quoting software up. I need to ask the question, right? When I'm selling a life policy, hey, did you ever think about disability coverage, DI? Okay. And then I need to know the basics, know enough to be dangerous, right? So I can quote it and write it. And I think what most agents don't understand, and I brought this up in some of the marketing, is the money to be made with selling DI is unbelievable, right? You're building an annuity basically for yourself, a renewal stream that can last for 10, 20, 30, 40 years. It's huge. So we even did a case study that I want to show everyone in just a minute here to explain, yes, the first year commission is great, okay, and we did kind of a hypothetical, but look what happens after 10 years and 20 years on the sale of one DI policy. So I kind of wanted everyone to understand the basics, and I think by the time we're done, you will be off to the races when it comes to selling disability coverage or insurance, if you will. Let's move on to the next slide here. So, like I said, we have a bunch of DI carriers, but in my opinion, the two top when it comes to white and blue collar are with us today, which again is Principal and Illinois Mutual. So these are some of the latest statistics that we wanted to pull up here. And what we're going to do, it's a lot of information, okay? Plus, I'm going to move fast because I want to get on to our two feature presentations. We're going to include all of this in today's thank you email, also the latest brochures and marketing material for these two carriers and products that you're about to learn through in just a minute or two. But real fast, check out top left corner. Okay, these are the bullets when it comes to DI that you should be writing down, or wait until we send the thank you email. DI, great door opener, right? Everybody's out there talking about life insurance and IUL and term, final expense. Well, who talks about protecting the breadwinner's income, right? God forbid if something happens, especially for these younger professionals. Number two, not many prospects have it, but they all need it, right? Let's be honest about this. Most people do not approach this prospect bucket and talk about DI because most agents aren't aware and don't know enough to be dangerous. Okay, this is a big one. Number four, almost all individuals depend on their income. They can easily see the benefit of disability coverage. Now, I'm not going to go through each one. I'm going to skip around a little bit just for the sake of time, but I'm going to move down to number 6 here. Offering disability insurance to the client is part of a financial professional's due diligence process, right? You have to make sure, this is a big one because you have to make sure they're protected. You have to make sure you're asking the question. When you're talking about, ringy marketing, when you're talking about constant contact and keeping your name in front of these prospects, and you're always bringing up, let's say life insurance, annuities, critical illness, accident coverage, you must ask the DI question as well. And you need to write that down for the new year. And think about this too. We were also talking earlier offline, and we kind of came to the conclusion. We said, when you're thinking about disability coverage, okay, and you think about all the agents that are out there selling it, right? Think about all of the IMOs like Levinson that are only focused on marketing and selling disability coverage. That's how they make a living. Okay, some are as big, if not bigger, than Levinson is, and they're just focused on DI. Think about some of the agents and agencies that are only focused on DI. Okay, the opportunity is out there, and you need to put the second hat on now. Okay, it's huge. I'm telling you right now, and these are LIMRA statistics that prove our point on the right hand side. Okay, and again, we'll include this in the thank you email, but I want to keep moving along here because we got a lot to talk about. Next up is a contest that we put together, and this has to do with life, DI, annuities, and it's very simple. Think about this for a second. Write this one down. Write 3 and get leads for free. Okay? Write 3 apps. It doesn't matter. Could be a mix of life and DI. Doesn't make a difference. Okay? As long as it's a minimum premium of $1,500 a year, you get our exclusive social media $1 million life leads. Now, think about this too. This is all younger professionals, a lot of teachers, okay, young lawyers, physicians. This is perfect to bring up the DI question. On the bottom there, annuity side, okay, same exact thing. Write 3 or more, starting at $100,000 FIA. Boom, you're in. We have an exclusive annuity mail or drop we pay for. It's free. Okay, so you can start off the year in a great place here with Levinson, and we will pay for your batch of leads. Let's keep moving along. We have 2 other contests that are just about over. In fact, you have about 24 hours to get these in, and it's very, very simple. Our new instant decision term up to $2 million, okay? Write your first app. Not only the commission is huge, renewals are huge, okay? Plus, you get a Fire 10 tablet. Write your first app, you get the new Amazon Fire 10 on the bottom there. And by the way, this is all on Insure Me Now Direct, which is direct to consumer. On the bottom is SureBridge. Okay, write your first 2 apps, get $100 cash and the new Fire 10. These are all low premium, easy sales. Okay, they're all instant decisions. Some are guaranteed issue. Okay, and your client can do this at 2 a.m. Doesn't matter. Okay, all on Insure Me Now Direct. It's free for you. There's no reason why you should not have this up and running, especially for the new year 2023. Okay, let's keep moving along. I got a couple more slides, and then I'm going to introduce Bob Herman, our VP from Principal. So real fast, what's new is you better be RSVP'd for the Levinson Expo in 23. And the date is April 21st. Write that down. Make sure you are in. We're capped at 300 agents, and we're already approaching about 220 to 230. So you got to RSVP. It's free. Okay, we're going to have all of our top carriers there, our agent panel, and you can qualify very easily. Think about this for a minute. Okay, beachfront resort right on the sand, free room starting at 40,000 of premium, and then we have round trip airfare. Okay, we have up to 2 free nights at our beachfront location. So it's a complimentary weekend tied into the expo. And even if you're brand new, you haven't written an app yet, it's also free for you. We have breakfast, lunch, snacks, the whole deal. And it's a day full of sales strategies and ideas that will change the year. Okay, right hand side, we have the new Carrie's Corner editorial coming out this weekend. And then our final podcast that's going to wrap up 2022. Keep your eyes peeled for that as well. Our mailer programs for life and annuity, they are raising the postage price. The U.S. postage is increasing, so you have until January 20th to lock in the great discount pricing that's available today. So make sure you get in those lead orders. On the bottom, the Ringy CRM tool, that's a game changer, okay? Especially if you're out there marketing life and you want to bring up DI, this is the perfect way to do it by driving the Ringy message home, by texting, emailing, calling your prospects, your friends, family, network, right? And setting up the appointments for you, okay, with your shared calendar. This is huge, and I hope you have this up and running on autopilot for 2023. And then all Levinson agents get a 40% discount for the first 6 months. Or you can use the free trial for 2 weeks, okay? And it doesn't matter. You don't have to give a credit card number. There's no commitment to anything. So whatever works for you, but I definitely encourage you to give that a shot for the new year. Okay, Levinson's DI carriers, and then Bob's going to take the wheel. So last but not least, this is a list of our core go-to carriers. So on the left, you can see we have impaired risk disability. We even have guaranteed issue DI. Okay, so that's an option as well. As you can see, moving over to the right-hand side, blue collar DI, Illinois Mutual is at the top, and then moving over one more column, white collar DI Principal. As far as premium, as far as value add bang for the buck, they are our go-to when it comes to white collar. And then on the right side, direct to consumer, think Amazon, right? That's your client logging into your website at 3 a.m. and literally running a quote, right, on themselves or maybe their spouse, and they can sign up instantly, instant decision, and the policy is placed by the time you wake up, and then the guaranteed issue option is on there as well. So again, great value add for moving into the new year, especially if you have agents that work under you and you're downline. You should be marketing this stuff, okay? And if you need help quoting DI, if you need any marketing material, everything's on our website, or reach out to any one of our marketers, okay? Everybody in the office, when it comes to life, DI, annuities, they have literally over 250 years of combined experience. So we're here to help every step of the way, even if it's your first DI app ever. Okay, our first featured presentation is our regional VP from Principal. My friend Bob Herman is joining us. Sit back, relax, take notes, and let's all learn from Bob today. Bob, you there, buddy?
I am. I just need to know how I share my screen.
Okay.
Oh, here we go.
Just one second. Okay, perfect.
Good.
Yep, we are good. I think, yep, we are good to go.
Thanks, Bill. Hey, appreciate the introduction too. You know, Jeff and I I think one of the things that we always strive for is that just having our agents bring this topic up with their clients each and every day. And I thought you did a great job of that, Bill, right from the very beginning. Again, I've been in this business for a while, and I think one of the things in regards to disability income is that we just need to do a better job of bringing this topic up with our clients each and every day. Principal does a focus group study each and every year with people that own disability insurance, that don't own disability insurance, and so forth. And they do this throughout the country. And the number one response that we get from clients, and when we ask, why don't you own this, is nobody's ever asked them about it. So again, anything you can take away from this call, build it into your business plan this year to make sure that those clients between the age of 18 and 55, you're at least asking this question. And sales idea number one is, again, you got to set the expectation up front. So when you sit down with a client for the first time, maybe even if you've had a client for a while, reassure them that there's 3 areas that you want to discuss with them. Number one, and this is the areas that you work. In the event they live too long, they die too soon, or they become sick or hurt somewhere along the way. I think we have a tendency to not set expectations up front. And the problem is we come back later and say, oh, by the way, after we've sold them life insurance or an annuity or something along that line, oh, by the way, tell me a little bit about your disability plan. Well, by then they're like, okay, I'm out of gas. Bring it up front, make sure it's important. When you bring it up from the very beginning, it shows the importance of that product also. I think if you were to take those 3 items though, live too long, die too soon, or become sick or hurt, the one that probably is most important on that list to any client is the first one, live too long. You know, everybody's concerned, am I going to have enough at retirement? Am I saving enough? Am I putting it in the right investments? Am I getting the right returns? And we all, as advisors, tend to focus our attention there. And the clients want to know this stuff. But the problem is, and we have to make sure they understand this, if something were to happen, if they were to become sick or hurt somewhere along the way, and they don't have their income protected, it's going to create havoc with this whole plan. And we don't want to be in a situation where there's no plan in place, because then we're left with digging into the only place we saved, whether it's a 401k, an IRA, a SEP, and now we're faced with penalties. We lost the magic of compounding. We don't want to be in that position. So man, again, just right from the beginning, sales idea number one, set the expectation up front. Here's the beautiful thing about Jeff Wilson at Illinois Mutual and myself. Who needs disability insurance? Everybody that puts their boots on every day and goes to work. Anybody between the age of 25 to 55, we can cover anything from an accountant to a zookeeper. So between these carriers, you've got most of these occupations taken care of. All you need to do is call Levinson and Associates, and they'll set you up with the right carrier for that client. Don't be worried about that. Again, from our client's perspective, there's 4 things they want to know. And don't make disability insurance complicated. Don't get lost in the weeds. I see too many advisors that spend their time on the illustration talking about definitions. Don't get lost in the weeds. Keep it simple. The clients typically want to know, how much can I get? When does it start? How long does it last? And most importantly, how much does it cost? The first one, in regards to how much they can get, is a rule of thumb. We say we protect around 60% of income. And I think too often what happens, and you may have a prospect or somebody that you want to share an illustration with, you ask, whether it's principal, and we're guilty of this all the time. Hey, I need an illustration or quote on this client. Great. We show maximum benefit for that client, all the bells and whistles. We send out this massive illustration and we lose the client right from the beginning, because the first thing they focus on is the cost. We understand that there's a maximum they can get. But I always say, get that illustration, but also get a second illustration for $1,000 a month. Sales idea number 2, just, keep it as though everybody can afford. Get them $1,000 a month, start there, and sell it in units. If you were to be faced with an illness or injury and you were out for the next year, how many of these units would you like to see come in each month? 2, 3, 4? It's a linear rate, so just multiply the premium by 4, by 3, whatever it comes out to. You make a difference in somebody's lives, even if they bought a small benefit. If they bought $1,000 or $2,000 a month, I don't care what they bought, you've put them in a better spot. And keep in mind, what we're trying to do is not only protect income, but we're also trying to protect their insurability. Jeff at Illinois Mutual, myself, we have future purchase options. And that's one of the, Bill always talks about hot topics or hot points within the carrier's principle. We have 2 future purchase options that come free with a contract. Make sure that your client understands that they can protect their income, but they also have the ability to increase that benefit in the future without ever having to arm wrestle with an underwriter again. And again, all of these things have a variable in the cost, right? The longer you can wait, the shorter the benefit period. Everybody can afford something. The 3 objections that we primarily hear from our clients is, number one, that nobody ever thinks it's going to happen to them. Not me, Bob. I'm never going to go down. It costs too much is the second one that we hear quite often. And the third one is, I have something already. I have something through my employer. So again, if we're doing our job, making sure we're bringing this topic up with our client, we have to be prepared for that first one. It's never going to happen to me. And I can share with you these statistics that we have, right? All these are the types of claims that people face and how long they're going to be out. These things for most people are meaningless. You've got to share stories, real life stories. Everybody knows somebody that's been sick or hurt. Everybody knows somebody that's been faced with cancer or chemo, or they've had some type of injury. And you've got to share that. What happened to those people, right? How did they survive? How did they meet their obligations? And again, make that, as they always say, paint the picture and put the client in the picture. As far as cost is concerned, as I mentioned earlier, everybody can afford something. You can design a plan to make it affordable for anybody. We want to get them something. Start with $1,000 a month, sell them as units. I know Jeff may have some really good ideas at Illinois Mutual in regards to some of the things that they do too. But again, we just want to get them as a client. Get them as a client, grow with that client. In our world at Principal, we tend to focus in the white collar professional marketplace. There is, we always say that we're complementary, Illinois Mutual and Principal, in regards to the markets that we're in. But there is some crossover, and don't worry about it. Like as I said, Levinson and Associates will steer you in the direction to make sure you've got the most competitive, most competitive product available for that client. The third objection that we hear in our world, again, is, hey, Bob, I do have something through my employer. Great. Now, most people just stop right there. And don't do that. There's tremendous opportunity in this space. And this is just a typical example. You got a client that says, hey, Bob, I have something through my employer. Great. Tell me a little bit about that plan. There's 6 pieces of information that we want to know about any disability plan. You as an advisor should be prepared every time to find out these 6 pieces of information. How much do they get? When does it start? And how long does it last are the first 3. Typically it's 60%. Maybe the benefit starts after 90 days. Maybe it's payable to the age of 65. And then the next 3 is who's paying for it. It determines the taxability of that benefit. What's the cap on that disability plan? All disability plans have an ultimate cap, $5,000, $10,000, $15,000 a month. And then again, what's the definition of earnings? So in this example, we've got a client making $75,000 a year. And we asked the client, hey, in the event you were faced with an illness or injury, how do you meet your obligations? Well, I got this plan at work. Well, tell me a little bit about how it works. And then go back and show that client. Write it down. Here, you're making $62.50 a month gross. You're after taxes, you're bringing home $43.75 to pay all your bills. In the event that you're faced with an illness or injury, you're going to see 60% of that $62.50, which is $37.50 a month. That's a great plan. Most people don't have access to these types of benefits. Always tell them how cool they are. And then remind them, again, I noticed that the employer provides this, which means that benefit is taxable. So that $37.50 you thought you were getting is going to be $26.25 a month. Now, many of our clients supplement their group policies with their own individual plan. And, I can tell you, everybody, there's value in having your own individual policy. I think everybody should own their own. But in this scenario, what are the reasons for that? The first reason is we can replace almost our net income with supplementing with an individual policy. In this example, we get another $1,600 a month tax-free on top of that $26.25. It brings us right back to our 70% of income. So we can meet our obligations that we're faced with. It's hard enough living on 70% of your income. Try living on 42% of it. I think the second thing is in what happens to this client, and we got to remind them of this if they ever were to leave that employer, whether they go for more opportunity, maybe they go for some equity interest, and the next employer doesn't have a group disability plan, or the plan design isn't the same. They have these policies, that $1,600 they take with them. It has a guaranteed premium, and it has a future purchase option that allows them to increase that benefit without ever having to go through medical underwriting. You're giving that client a tremendous service by having their own policy. And again, the third reason why what many clients supplement is, again, educating them, because if in fact any of these individuals were to become sick or hurt and they've got 26, 25 coming in a month, they might feel like they're going to be okay. But at some point in time, they're going to find out that they're now going on, they're going to be disabled for a while, and they're going off of their employer's health plan. Now they got to pick up their health insurance through COBRA, maybe through the outside marketplace, and it's an expense that they're not anticipating. And we all know health insurance is not cheap. So it's an expense that we got to be prepared for, and make sure you educate your clients in regards to it. So those are three reasons. And again, sales idea number 3, educate their clients. Now, one thing I would mention to you in regards to Principal, I know Bill had mentioned guarantee issue. Principal does quite a bit of guarantee issue programs. And again, if you're working with anybody in a situation where they're highly compensated, maybe they got a group plan that says they get 60% of their income up to $5,000 a month, and they're making $300,000 a year. Well, that $5,000 a month ain't much. And we can layer individual coverage on top with guarantee issue. We need 5 lives, 100% participation of a defined group, and employer paid. And we're able to layer guarantee issue disability benefits on top of those group benefits. So we do quite a bit of that, whether it's a law firm, a CPA firm. We do a lot within the banking industry. Banking and credit unions are some industries that we have a lot of success with. So just kind of keep that in mind. And if you ever have a case, just again, send it over to Levinson Associates, and they'll get us involved to help you out with that. One of the things I just want to make you aware of too is, and Jeff may elaborate a little bit more in regards to this, is that there are 3 different types of contracts that we see in our business. One is non-can guaranteed renewable. That's all that Principal sells. Guaranteed renewable and conditional renewable. Now, both Jeff and I sell our products that have this guaranteed renewable feature that simply says that once I have the policy, I have the right to renew that policy all the way to the age of 65, as long as I pay my premiums. And the carrier can't change it or take it away from me. That's the value of this individual contract. The client controls it. They have the right to renew this thing. Now, a non-can contract guarantees the premium. Guaranteed renewable, the rate's not guaranteed. They expect it to be level, but they can raise it. And maybe Jeff can elaborate on that later. But again, typically what we find is the non-can products are sold in the white collar market. The blue collar tends to buy the guaranteed renewable product. Both of these become conditionally renewable at age 65, which means is the client after age 65 can, at Principal, they can keep the policy on the condition that they're still working full time. I had a call last week with a broker whose client was a physician at 65 years old, was trying to buy some disability insurance because he said his policy was terminating. And I just reminded the guy, hey, take a look at his contract. It can be conditionally renewable, and sure enough, it was. He can continue that coverage. So it's good to know. And unfortunately, we do see a lot of our clients continue to keep coverage beyond age 65. In regards to, Bill had mentioned this earlier, in regards to things that we look for if you need an illustration or a quote on your client. Obviously, name, date of birth, male, female. In our world, we tend to find the female rates to be a lot more expensive than the male rates. Between the age of 30 and 45, the ratio of claims, females tend to go on claim. It's almost a 2-to-1 ratio between the age of 30 and 45. After age 45, they tend to be pretty consistent. So just know that those female rates are going to be high. One thing, again, that you want to keep in mind, and Bill had mentioned this earlier, if you have 3 or more lives at a common employer, we use a unisex rate. So the female rate sting goes away. Plus we discount that rate 20%. It's a huge savings. Again, it's outside of the medical marketplace that we can do those things. State of residence comes into play because obviously contracts and rates are all driven by those states. Smoking status, again, any of those things, cigars, medical marijuana, all have an impact in regards to whether we can write these folks or whether it's going to be a smoking rate. The two that we tend to spend the most time with is making sure you're getting information about the income that these guys drive, your client. If it's W-2, it's fairly simple. If you've got a business owner, just know that we can count all of their income, whether it's W-2, K-1 distributions, retained earnings in a C Corp. We can count all of that towards their to getting them a benefit. And then just making sure in regards to their occupation that we have enough information to determine the duties that they're doing each and every day to make sure that we're in the right occ class, so we get them the most favorable occupation class, which determines rates and features of the policy. And then the last one is other coverage that may be enforced. Before I wrap this thing up, I just want to mention again, Bill had said, what are some hot topics within Principal? I mentioned the 2 future purchase options that come with a contract. They're no cost options with Principal. Simplified underwriting. We used to do $6,000 a month. Now they moved it to $10,000 a month with no blood, no urine, no financial documentation. There are some occupations that we still may require some financial documentation. Tend to do more of that with the business owners or realtor or something along that line. We need verification of that income. Electronic applications. We do more and more of that with our advisors. The overall platform of products that we have available with our business products, our individual products, depending on the state that you're living in, we have 6 products available, from buyout, BOE, business loan protection products, pension contribution protection, key person. So we've got a lot of different products that Levinson can help with your clients in regards to these needs that they may have. And as I just mentioned, also that guaranteed standard issue platform that we have available. We're doing a lot more business in that space. Here's the last thing I'll leave you with. Why it's so important. We want to get these clients at a young age. Obviously, the benefit to the client is, more than likely the rates are going to be lower, but also their health is going to be better. Getting them through underwriting is a hell of a lot easier at 35 than at 55. But this is just an illustrative purpose. I try to share this all the time, that if you bought a policy at 35, or if Ray over here waited until he was 45 to buy it, I don't care when you buy the policy. When it's all said and done, if you were to take the cumulative premium at the age of 65, it tends to be about the same. You're just, paying more and getting less coverage the longer you wait. So you might as well buy it early and make sure you let those clients know that. Thanks, Bill. I'll pass it on to you. You can introduce Jeff.
No, that was great, Bob. Real quick before you go, I remember you mentioned a book at the expo a few years ago, a good disability book that the agents can hand out to consumers. What was the name of that DI book? Everyone can jot it down.
It's the Napkin Advisor, and there's 50 sales ideas on disability insurance. It's called the Napkin Advisor. Chris Carlson was the author.
That's right.
It's a great book. It's simple ideas. And like you say, Bill, you don't need 50. You just go through the book and find the ones you like and start using them.
Yeah, perfect. Yeah, if you can jot that down, we'll also include an order link in the thank you email. But yeah, I appreciate that. Okay, Bob, great job as always. Next up is my friend Jeff from Illinois Mutual, who's also got a great story to tell in a little different niche. So both carriers fit perfect into your toolbox. Jeff, you there, buddy?
Yes, I am. Thank you. Can you guys see my screen?
Yes, we can.
Awesome. Well, thanks, Bill and Bob. You're spot on. And I was listening to your presentation, and we have a lot of the same ideas and suggestions about how to promote and to even just open the conversation about disability insurance, which is incredibly important. But from a Illinois Mutual standpoint, and Bob's absolutely right, we complement each other very well. And I think Principal's an awesome company. They will not be your only solution, and we won't be your only solution as well. So if you have both of our companies in your toolbox, I think you've got pretty much everything you need. But from an Illinois Mutual standpoint, we really only have 2 products in our portfolio for disability. Both is one is an individual, and whether you're a 1099 or a W-2 employee, you're eligible for disability coverage there. And then we have a business overhead expense policy, and that's really focused in on small business owners, your mom and pop shops, things along that line. It's really designed to ensure the owner of the business or the practice, and if they become disabled, whether they're sick or injured, there's money there to pay reoccurring expenses that business owner has. So it's a stopgap in a way until the business owner can get back to work. So if you work in the small business market, it's critical that you have that conversation with them about protecting their business. Okay. So our product is really set up, whether it's the individual or the BOE, as what I like to call a la carte. The base is the base is the base. And a lot of times that's all you need. But we have 12 riders where you can really highly customize the need for your client. And like Bob said, Bill's staff at Levinson are very well aware of what they have, and they can help you mix and match of what you need to solve whatever problem that you have from a income protection standpoint. Okay. And one thing I want to point out here about the business everyday expense, we are the only carrier in the industry that you can put our return of premium rider on that, and we'll talk a little bit more about that in the second. So really good coverages no matter what you're looking at to try to accomplish here. One thing that I wanted to really focus you in on is our target market reach, and Bob's right. We complement each other very well. We rarely ever overlap. There may be some time, but I always tell that my agents and advisors that I work with, first of all, I think, again, Principals are an awesome company. They take care of their policy owners. Well, if that fits the scenario, then awesome. Sell it all day long. But sometimes it doesn't, and you need a good pivot company, and that could be us in a lot of situations. It is. Now, where we fit really, this will help you kind of get a picture of that, is about 71% of our policy owners' income ranges from $40,000 to $150,000 a year. This is family household income. And then about 70% of our policy owners own that monthly benefit between $1,500 and $5,000 a month. And I always say, I don't really care if they're blue, white, or gray, but if they're around that $150,000 a year mark or less, we could probably come up with a couple of budget sensitive solutions for you. Now, we may not be your lead company, but we're there for you just in case what you are presenting from the lead company doesn't fit, or you get some pushback on that. Then you need a pivot company that's, in a lot of situations, less expensive, because in our market space, which is middle America, budget is a big deal. So with doctors and attorneys and CEOs and highly compensated employees, that's not necessarily the case in a lot of situations. But for someone who makes $50,000, $60,000, $70,000 a year, every penny counts. So we want them to have coverage. And I think Bob even mentioned this, maybe Bill did. Maybe it's just a very simple product that covers a mortgage. Well, that is better than nothing. So at least have a company or a product in your back pocket that you can pivot to that's more price sensitive. Now, just to kind of give you a snapshot of where our in-force block of business sits, you can see here about 88% of our policy owners aged between 41 and 57. Okay? The monthly benefit is around $2,500 a month, even though we'll go up to $10,000. And then there's your medium or average premium. Note that in my region, which is the whole East Coast, we average a higher premium than the rest of the nation. There are a couple of factors there. Demographics, one, density of population is probably another. But one of the things that I like, what the direction we're trending, especially in my region, is that we're seeing higher premium cases. And one reason why is because of what I just said before. I don't care if you're blue, white, or gray collar, $150,000 or less, we could probably come up with a couple of good options. And I think that's helped drive our premiums a little higher. And one of the big reasons is our return of premium rider. So here's another, just to kind of help frame up from a benefit and elimination periods, just like Bob's Principals contracts, we're very customizable, but we tend to see that 90-day elimination period as being the most purchased. And that's great, but you got to also realize setting expectations with the client. 90 days is a long time to go without an income coming in. So if it's based solely off of, hey, I'm stretched really thin, I can't afford anything, maybe that 30-day, again, something's better than nothing, but they need to understand that policy has to stay in force before we can start paying that monthly benefit. So budget is a big deal. And in that benefit period, we sell more of the 2-year plan than anything in our max plan is to age 67. So again, it just comes down to what are they comfortable with, what fits their budget. And 2 years, if you think about it, is really a long time to be disabled. And we know for a fact, and looking at statistics, it takes over 2 years for someone to typically get any benefit from our Social Security pool that we pay our taxes into. And about 70% of all first year applications are immediately rejected. So I think that's one of the reasons why we sell a lot of the 2-year plans, because that really hedges your bet against getting anything out of our Social Security pool. Now, also, it's very complex process to navigate the legal waters to get that benefit from the government. So at the end of the day, most folks will have to hire an attorney anyway to help them get through that process. But then again, how do you pay for that attorney? So it's a really a daunting situation. But with maybe a 90-day 2-year plan, at least you have some coverage there to take care of you. So I mentioned the riders a little earlier. 24% of our in-force block of business, they have no additional riders. So that really just tells me that our core product is solid. And a lot of times, again, probably from a budget standpoint, that's all they need or that's all they want to purchase at the time. The return of premium and the GIO rider are always neck and neck as our top riders. And return premium is my absolute favorite. And I'm going to show you an example of how that would work in a second. And then occupation classes, class 5 and class 3. Class 5 is our best class, and class 3 is right in the middle. So we're spread pretty much all over the spectrum there, which makes me feel good because we're not very myopic on one class or another. We can help a lot of different occupations, such as these. And this is a busy slide, so don't get too wrapped up in it. But if you kind of glance through here, there's all kinds of occupations here that I know we run into every single day. I'm sure you do as well. So those are blue, white, and gray occupations scattered out through the industry. So keep that in mind. No matter what they do, I bet you we can come up with some solutions there. So really where the rubber meets the road, especially with our market, the middle market, comes down to budget. So I thought I would just give you a snapshot of what a typical plan might look like for you. This is Ryan. Now, Ryan is an accountant. He's 35 years old. He makes $80,000 a year. And the plan we put into place here is a 30-day elimination 2-year benefit plan. So Ryan doesn't have any health concerns, any standard height and weight. So what I did here is just saw for a $3,000 a month premium or benefit. Now we know that this is Ryan's own personal portable plan, and this is not a group chassis plan. So he pays for this premium with after-tax dollars like he would, say, a cable bill. So if he goes on claim, that $3,000 a month benefit from us will be tax-free. So if he did nothing else here, it cost him about $48 a month. Okay. The guaranteed insurability option there for less than $1 a month gives Ryan the option to bump up his coverage every couple of years with no medical underwriting. And that's critical here because we don't know 5 minutes from now what our health is going to be like. So with this rider, you can bake in a way to help push up and increase the benefit from our policies with very little effort from the client, which is good, especially on the medical side. And then here's your return of premium. That's almost $20 a month. But where this really stands up here is here. So if Ryan took this policy and added the return of premium, at the end of the day, we would return every single penny that he put in to this product, and that's about $25,000 a day. So that will help you overcome any objection of, hey, look, if I have this policy and I never use it, what happens to it? Okay. This is a great way to say, well, we're going to build that in because nobody thinks they're ever going to be disabled, right? So you're bulletproof, you're Superman, no problem. We'll add this rider to it, and then you go work through your working life, and at age 67, you're done. Then we'll return every single penny that the client put into this policy. And then here's another one. This is Emma. She is a hotel supervisor, a little bit different scenario, but we solved for approximately 1% of monthly income, and between 1 and 3%. Bob would probably agree with me on that. That's a feel-good zone. So there's some psychological trigger that if you get over the 3 or 4% of someone's income, it's almost deemed too expensive. So we try to keep our solutions around 1 to 2% of income. So Emma here, she makes $90K a year. Her total premium is a little less than $100 a month, and that includes that return of premium rider that we've added on here. If you take that out, it's incredibly inexpensive. But here's what that ROP would look like for Emma, and a little over $36,000. Now, I will say we've won some big cases strictly because of this return of premium. So don't discount that. Always show it as an option. As a matter of fact, from a best practices situation, most of the advisors that we work with who sell a lot of this ROP rider, they always show it as an option and let the client decide if it fits into the budget scenario. And if it does, fantastic. If it doesn't, at least you've shown them the rider, just in case at some point in time they come back and ask about it. So do it up front. Let them make that decision, not you. Okay, one of the things that both Bill and Bob mentioned, and I think is critically important, especially when it comes to disability, is communication, education, and simplicity. And here are two very simple fact finders. You may have your own, but you can certainly use ours. And this really drives home the conversation to some of the basic elements of expenses that we all typically incur. Now, not everyone has a mortgage, but we pretty much all have utilities and we have to put food on the table. So groceries and utilities. And if you don't have a mortgage, maybe you have rent. So I really love this piece for things like, let's just say you're doing an annual review on your client's life portfolio, and you've done your analysis and you decided that everything looks pretty cool. So maybe the transition might be, hey, Bill, I took a look at what we've got in place for your life insurance needs. I feel pretty good about it. I don't think we need to make any changes at this stage. However, and here's your transition statement. However, while we're together, we need to take 10 more minutes and talk about protecting your paycheck. Okay? That's what disability insurance is all about. So that's a very simple transition. And if Bill's paying attention, he may say, well, what are you talking about? Then you can launch into your elevator speech of, we're taking care of the life insurance side of your pyramid, like Bob showed you in his slide here. We need to take care of the disability side of it. Same coin, different sides. We got to get that foundation solid, because all those other fun things that you do on top of that, in insurance or investments, things along that line, saving for college, those are dependent on money being available, whether you pass away through the life or you don't pass away. You're disabled, but you can't work. So we want to make sure we take a really hard look at your foundational elements before we move into the fun stuff. Okay. So any of these materials available to you guys, just reach out to Bill's team. And I know Bob's got a lot of good stuff on the principal side as well. So mix and match, use the ones that you need. So in closing here, I wanted to share some things that I think intuitively you probably do anyway, but over my years and pulling up best practices and listening to agents who do very well, not only in the DI space, but in the financial industry as well, there's some very common themes here. So I want to show it to one simple really works. If you think about it, disability is one of those nebulous insurance products, but it's critical. But most people don't understand what it is. So keep it very simple, high level. It's a paycheck protection product. Yes, we need to see if you have any in your group plan, but like Bob mentioned in that slide, which was an excellent slide, people don't understand what they have if they have it in their group benefit package. So communicate. You have to educate them on what that is that they have, and then where the shortcomings are. And then that's where products like Principles or mine can come in and fill the gap. Budget, I've said it a million times, very important. You could be the best salesperson under the sun, but if the client can't afford it, they're not going to buy it. Or you may get them to buy it, but the strain on their budget to pay the monthly, quarterly, semi-annual, annual premium could be too great, and then you're going to lose a client. The third thing is paint the picture. I'm a very visual guy, and I see things a lot quicker, either in my mind's eye or in a chart or something right in front of me that I can grasp. And that comes back to the whole simple explanation of what a DI product is, and it's a paycheck protection product or income protection product. So keep that in mind. In the last, Bill mentioned this. Most people didn't wake up this morning going, man, I cannot wait to talk to my advisor, my rep, my agent, whomever it is, about disability insurance. Unfortunately, it just doesn't happen, especially in the middle market space. The only occupation that we know, and Bob will agree with me on this, that really reaches out and tries to buy as much DI as they possibly can without really being solicited are doctors. And that just kind of makes sense because they see it every day in their waiting room. Nobody's there because they want to be there. They're there because they're sick or they're hurt. So they understand it, and they understand how easy it is for someone to become disabled. So they buy as much as they want. So the other side of it, everybody else, you have to do a little bit of education, communication, problem solving, so that they understand why this is important to the overall financial structure that they have. So this is applicable to basically any product solution that you sell. Keep it simple, work within a framework of a budget, paint the picture, and then you got to ask. If you've got a book of business and you're not asking your clients, hey, when's the last time we sat and talked about protecting your paycheck? You're really doing them a disservice, because that's key. I always say, who's the first person that's going to be fired if someone loses their job and they can't earn a paycheck? Probably us, because they need to divert whatever money that you put in place for mutual funds or college savings. That money's going to be diverted to living expenses. So all the hard work that you guys do, you don't want to be the first one out the door. Okay? So make sure you cover that. So that in a nutshell, Bill, Bob, where we are, we definitely follow the same path a lot. Bob and I do that quite often. And I think you've got two great carriers in your toolbox to help with any solution. And always, you can reach out to Bill's team anytime, or to Bob or myself as well, and we'll certainly be able to help. So any thoughts, questions? Bill, I turn it back over to you.
Thank you, Jeff. I appreciate that. We're right on the hour here at 4 p.m. Eastern, so I want to have time for our giveaway, our question of the day. But what I want to do is, we got a bunch of questions and comments that came in over the last hour. We're going to answer every single person. Okay, we'll get back to you as soon as we put a bow on this, and then we can circle back with Jeff and or Bob if needed. We also need to make sure that you are active and appointed so you can dive into the software and the website. So if you already have a contract with Illinois Mutual and or Principal, just let us know. We'll get you transferred over and use the cash for contracting or leads for contracting incentive. You will get paid with your first app above and beyond more commissions. Okay, so those two coupons will be in the thank you email. And then what I want to do is, I have a couple slides left, so I'm going to run for about 5 minutes, and then I'm going to ask our question of the day. Okay, so whoever answers first and correct wins. I have two gifts because it's the final training of the year. I'm giving you the Amazon Fire tablet and the new Apple AirPods. Okay, so kind of a 2-for-1 today. We'll make it fun, but just bear with me for another few minutes here. What I want to do right now, and then I have my top 5 bullets for how to start the new year strong. I want to share with you all. If you want to write these down, that would be great. So real fast, to get started, everything is on our website. If you just follow those arrows, you'll kind of get a feel for it, and we'll include the Get Started link in the email. Once again, we'll send that out before we leave tonight. Access all disability marketing material. So we have kind of a microsite section, if you will. You see the red box on the right side. It says products, and then under that, disability income, and then everything you need is at your fingertips right inside that folder or section. Let's keep moving along here. What I want to show everyone, and this is crucial, right? We talk about building a renewal stream, building an annuity, right? For even retirement. You're an agent out there, you're working the business for 27, 28 years, right? And what's in it for you down the road? So, I mentioned this earlier, we have agencies, GAs, MGAs, even IMOs that are under us and agents that specialize in only disability sales. So think about that, right? There's a reason. Number one, it's an underserved market. Number two, look at this example in front of you. This is just a hypothetical, right? Obviously, your commissions could be much more than this, but I just wanted to show this example to everyone so they understood. This is an average size DI case, okay? Male, age 40, occupation class 5, non-smoker. The premium is $204 a month, okay, which is pretty, I would say, average for a DI case for a 40-year-old, okay? Now, let's scroll down. What we did is we showed first-year commissions plus lifetime renewals. So with Levinson, we have direct contracts. So what that means, renewals are a full pass-through, okay? So, for example, this typical case here in front of you, right? $200 a month, roughly. The total commission paid out, 125%. Okay. Now, think about this. You have 30, 50, hundreds of DI policies in force on the books. Okay. That's your annuity. That's your retirement right there. Your book of business needs to include DI sales. I'm telling you right now, you have to bring it up and ask the question. This is huge. Most people say, oh, I don't want to make 50, 60%. I'd rather sell an IUL and make, 80, 90, 100%, whatever it is. Okay. But they don't realize most of these products pay a lifetime renewal. And with Levinson, it's a full pass through. Next slide. What I want to show everyone is leads, right? Our fire sale lead mailer. Very important. Like I said, they're raising rates. Okay, you have to get in before the 20th of January. Then on the right-hand side, I want to bring this up as well, real fast. Our social media leads, right? They're $1 million no exam life leads. When you get these leads, it's going to show you the occupation of the prospect. Most of these prospects are younger professionals. What does that mean? That means they probably do not have a disability policy. So when you're bringing up the life sale or opportunity, ask the DI question. Okay, if they're the breadwinner in the household, okay, sometimes could be husband and wife, doesn't make a difference. They need DI coverage, especially if they have children and a mortgage. What happens if they can't work? How are they going to pay for their life insurance policy? How are they going to keep the kids and the family in the house and dinner on the table if they can't work? How? With a DI policy that triggers. Okay? You got to think about this. Ask the question. The next slide, real fast, is our Bill Levinson Experience podcast. And what I wanted to point out here, these are the top 5 episodes from 22. But if you go in and subscribe, okay, to your favorite podcast channel, okay, even on YouTube, it doesn't matter, Spotify, Pandora, all the above, Apple, iTunes, subscribe to Bill Levinson, and you can see all of the prior episodes. I do one every month. And what you're going to find is 2 of the top MDRT agencies that I sat down and interviewed, okay, 30 to 50% of their business comes from disability insurance. Very, very important. There's a reason why. I said it like 4 times now. Anyway, you got to check out those episodes. You will learn a ton. I promise you. It's all free. There's no reason to not jump in. Even if you're not a Levinson agent, doesn't make a difference. Okay, and second to last slide here, what I want to mention real fast is our future trainings. And then, of course, we're going to launch the new year on January 5th with the first live weekly webinar series. And here's what's so cool about this one. We're putting all our resources together and taking 22 in a nutshell and saying, what were the top carriers, products, tools, resources, technology, right? What can we learn from 22, put into 23 and make it the best year ever by leveraging the resources available from Levinson? That's going to be huge. Kerry will be on that as well. Write that down, January 5th. And then my last slide here in our question of the day real quick. Now, jot this down, and I know we're a little bit late here, but I think you'll get at least one nugget from this list. So this morning, I got out of the shower and I wrote down my notes. I also use an app on my phone called Super Notes. And what I'm telling you, and it doesn't matter insurance or not insurance, doesn't make a difference. You need to have a system, right? Notes are everything, right? How many times were you in the shower, driving in your car, whatever the case is, you see a bus bench, you get an idea and you say, oh my gosh, this would be great for my business. If you don't write it down an hour later, you forgot about it, right? Life happens. So download the Super Notes app, okay? If you want to use a loose leaf spiral, old school, that's fine too, but you need something for all of your notes in 2023. That's crucial. That's a no-brainer. Common sense, you need that. Okay, I'm going to mention real fast 5 bullets here. I love this one, and I'm doing this. I started it last week. Every single day, okay, you have your little yellow Post-it notes, doesn't matter what color they are. Write down, this has to be at night, okay, every day at night, write down your most important goal that you need to get accomplished, right, or task the following day, okay? And no matter what happens the next day, how busy you are, whatever it is, that one task must get crossed off. Do that every day. The end of 23 will be a different outcome, promise you. Okay, that's the one a day Post-it. Number 2, this is a big one. It's a free download. Okay, they have a trial. It's called the Super Notes app. And that lets you categorize all of your notes in one place. Okay, you can, let's say you're driving and you want to do a voice recording of a note. Maybe you got a great idea on the bus bench. Okay, you can use it for that as well. And then you categorize each note. Okay, so you have events and then you can make them pop up as reminders on certain days and times. It's called the Super Note app. Number 3, this is a big one. Share stories and reviews. Okay, you have a client that bought a DI policy from you and they said, oh my gosh, Bill, this is the best thing since sliced bread. I'm so glad that you brought this up to me. I would say, Shirley, do me a favor. Can you record that on your spouse's iPhone tonight? Okay. Or can you go to my website and write a Google review or go to my Facebook page? Okay. Get it on paper. Anyone that says something great about you, especially business related, about a policy, share it with the world. It's so important. Share real life stories and reviews all over your social media pages, your website. You got to get the word out that you are the insurance guru. When people think DI, LTC life, they have to remember you. Okay? This is another big one. Number 4. I don't care what day of the week it is. Commit at least 10, 15, 20 minutes to learning something new every day. Okay, it could be a podcast, a book. It could be a YouTube video on why prospects need to think disability income. Do something every day. You're driving in the car anyway to an appointment for 27 minutes. Why not listen to a podcast with some of our top agents? Commit at least 10 minutes a day to learning something new instead of your favorite radio station, right? Or a Pandora channel. It doesn't matter. Dedicate at least 10 minutes a day on learning something new. I suggest a podcast, but whatever you like, that's fine as long as you're learning something new. Number 5, and the last one, become the insurance guru. Okay. And you say, Bill, that sounds wonderful. How am I going to become the guru? Okay. Well, it's not easy, but I'm going to give you a couple suggestions. In South Florida, okay, you need, let's just say you're in central Illinois, in South Florida, wherever it is, you need to be known as the go to. You need to be known as, oh, when it comes to life insurance, annuities, disability, critical illness, I'm going to the man, Bill Levinson, or I'm going to the woman, Shirley Q. She does all my insurance and I trust her. And you have to be known as the guru, okay? Those reviews and stories, that's going to help you become the guru. You have to drip on your book of business, on your clients, prospects, friends, neighbors. Drip on these people once a week with an email blast. Okay, a group text message. If there's any local events, if you're into cars or pickleball or racquetball or the book club, okay, get active in the community. You have to be known. I'm not saying you have to be obnoxious about it, but plant the seed. Bill, what do? You tell them. Don't be shy about it. By the way, hey, here's my online business card. And then all of a sudden you subscribe them to all of your social media pages. You have to become the guru, okay? If you're 17 or 92 years old, it doesn't matter. You have to be known as the go-to, and you got to be trustworthy. How do you build the trust? You share the stories and reviews. Your mind has to think like this 24/7, and you will be successful, okay? There's no secret sauce. Anyway, with that said, I know I'm ranting. It's a little late, but it's our final training of the year. I wanted to make sure you walked away with a nugget or two. I'm going to ask our question of the day right now. Make sure your little fingers are on the keyboard and you're ready to answer first. And obviously, it's got to be correct. And then what I want to do real fast is you're getting your fingers prepared. Let's focus on Positive Tuesday. This is my 2022 top 4 quotes as far as likes and comments on all of our social media pages. I'm not going to read each one, but we'll include this in the thank you email. And by the way, that's my way of keeping my name out there, right? Some people think it's corny. Some people say, hey, what the hell is Positive Tuesday? It means nothing. It's just a way of me being creative and sharing quotes that work for myself and making sure that every picture has that little signature on the bottom corner that says Billy Levinson. You should be doing the same thing. You can call it Disability Thursday, Annuity Friday, IUL Monday, okay? Whatever you want. But you got to get creative and you got to get it out there. Okay, question of the day. In 2022, okay, especially towards the middle to the end, I spoke about a CRM tool that works wonders. Agents are loving it. It's changing the game for our agents and agencies. Tell me the name of that CRM tool, and you win the new Apple AirPods and the Amazon Fire tablet. What is the name of that CRM tool we keep talking about? Kind of a funny name. It's got a little ring to it, should I say. Annalise, who was first?
All right, I see here first was Russ V.
That's Russ V?
Yes, V as in venison.
Okay, Russ V, congratulations. The answer was Ringy. It's got a little ring to it. Get it? With that said, let's have a happy and healthy new year. Be safe out there. Write down these notes. What are you going to do in 2023 that was different? Okay, what's unique? Okay, I hope you walked away with some nuggets. Please put these things in action, or else it all means nothing. You just wasted an hour and 10 minutes with us. Write them down, put your action plan together, and make 23 your best year to date. We'll see you back on January 5th. Take care. Thank you again, everyone, and great selling. Take care.